Sinking fund and reserve fund management for strata and commercial buildings. What we'll be looking at will be the history of sinking funds and as well as a case study, so we can show you some of the shortfalls of what's happened to some of the sites around Australia. So let's go and have a look at what's the definition of a sinking fund. So a sinking fund is a detailed and an estimate of the body corporate's assets, which goes over a 10-year period. So if you think about scheduling your car, it's working out the car engine has a life of 250,000 kilometres, and that vehicle needs to be serviced over that period of time. So that's the best way to pull that into place. If you don't look after your car, it's going to cost you a lot of money. So you can't just go and drive it. So we'll look at the history of sinking funds in Australia. Originally introduced into Queensland in 1987. Leary and Partners originally coined the idea of the sinking fund to work out the monies that need to get put aside, and it was introduced into New South Wales over a 2-year period from 2004 to 2006, and the ACT that was put in 2009. Also in Victoria, anything over a $200,000 turnover or 100 units needs to have a maintenance plan put into play. So yeah, instead of calling it a sinking fund, they call it a maintenance plan. So it's a bit different there. In WA, South Australia, Northern Territory, there's no legal requirements at the moment, and they call that a reserve fund forecast. So exactly the same document with just a couple of different names. In America, they call it a capital replacement plan. So exactly the same methodology, but just with a different name. So let's go and have a look at a case study. So this property is 56 units. No one's looked after it for 20 years. Building's cracking, it needs repair, needs painting, and it's not in good condition at all. So what we had to do was try and schedule the painting and the maintenance of that over the first couple of years. So you can see here we've fixed the rectification in year 1, we've done the painting in year 2, and then we did the stairwells in year 3, and that got us over the first hump of the painting cycle. You know, the life of a paint is usually around 10 years, sometimes it gets a little bit longer, so we've got enough money to look after the next cycle when that comes into play in 10 years time. So you can see the cracking in the building that we need to look at, so that's what we've done there. So if you need a sinking fund forecast or a reserve fund, you can either call Sydney or myself, and we can point you in the right direction and do the reserve fund for you and help save some money and better plan for your body corporate.